Hello friends, we'll be discussing another comprehensive problem which is related to ratio analysis. So when we understand about ratio analysis, we have already got an idea about operating profit, net profit ratio, gross profit ratio, etc. Now, this is something which is related to assets and investment. You remember there was a category where we mentioned that returns on assets and investment. Now, this specific problem will be based on that itself. So let's figure out what do we have for you here. So we have the illustration prepared for you right now. Let's figure out what do we have here. So we've been given a balance sheet and certain additional information. Based on that, we have found or we are supposed to figure out three ratios here basically. The first one is return on total resources. Second one is return on capital employed. Third one is return on shareholders fund. So on the basis of the balance sheet and information that has been provided in the system, or rather in this sheet, we are supposed to figure out these three ratios. Now we have the balance sheet mentioned down here. Let's figure out what do we have there. Share capital is rupees 8 lakh. Share value of each share is rupees 10. Reserves is rupees 2 lakh here. 8% debenture is rupees 2 lakh, which is again a long-term debt. Creditor is 1,60,000. This brings you to the total of liability side amounting to 13,60,000. On the asset side, we have fixed assets amounting to rupees 10 lakhs and current assets amounting to rupees 3,60,000. Now there's additional information that has been mentioned down here. Let's read it out. So net operating profit before tax has been mentioned down here. It has been mentioned to be at 2,80,000. So any operating profit before tax is mentioned as 2,80,000. The tax rate has been mentioned as 50%. That means on this 2,80,000 we have to mention 50% tax that will be deducted out of this, which will give you the exact operating profit after tax, that is earning after interest and tax. Dividend which has been declared amounts to rupees 1,20,000 here. Now based on these informations, we are supposed to figure out these three ratios. So let's start with the preparation of the ratios first. So the formula for return on total resources has been mentioned here. That is profit after tax upon total assets multiplied by 100. So first you need to figure out what is the profit after tax. So the net operating profit before tax was mentioned as 2,80,000, which you have dotted down here. Next thing is you have to subtract the tax. Now in the question it was mentioned that we have to assume that the tax rate is at 50%. That means 50% is the tax that we have to pay. So on 2,80,000, if you have to calculate 50%, that means 1,40,000 will be straight away deducted. So the balance amount that will be left will be net operating profit after tax, that is profit after tax. So now that we have profit after tax, we can directly put this value and figure out the ratio there. So that is 1,40,000 divided by 13,60,000 into 100. That will give us the ratio. So that gives us the ratio of 10.29%. So that is the return on total assets. So the first ratio, that is return on total resources, has been figured out, that is 10.29%. Let's box it out. We have denoted that as A. Let's go on to the next ratio that we have to prepare. So the formula for the next ratio that we have to figure out, that means return on capital employed, is profit before interest and tax upon capital employed into 100 is the formula what we have to figure out. Now capital employed is something that we already understand and we know where it is. The next thing that we have to figure out is what is the profit before interest and tax. But profit before tax is already what we know. We have to add the interest part in it. That will get you the total profit before interest and tax here. So the total that we have calculated is 2,80,000 plus 16,000. Now how have we calculated 16,000? Because 2,80,000 is already that we know, that is net profit before taxation. 16,000 is calculated on the debentures. If you see the balance sheet, there is a debenture value that states to 2 lakh rupees and 8% interest is supposed to be provided on that. So on that 2 lakh, 8% is 16,000. So that will totally give you 16,000 as the interest that was supposed to pay off. So that will be added again to 2,80,000. That will give you 2,96,000. So capital employed, the formula is shares plus reserves plus debt. In his, or rather in this specific problem, we have shares as worth rupees 8 lakhs. We have reserves worth rupees 2 lakhs. And debentures, or rather the debts, means long-term debts that we have is 8% debentures of 2 lakhs each. So that means capital employed is 12 lakh rupees. So let's put that thing now and figure out what is the ratio here. So that comes to 24.666%. Now if you round it off, that will be 24.7%, and that is the return on capital employed. We have mentioned that. Let's box it out. Now let's figure out the last ratio that we have to calculate. Now the formula here is profit after tax upon shareholders fund into 100. Profit after tax we already know. Shareholders fund is equivalent to the capital plus reserves. Only capital plus reserves will be shareholders fund. So that gives you 1,40,000 divided by 10 lakhs. So the percentage that comes here is 14%. So that is your return on shareholders fund. We have boxed that out as well. Now, this is how you prepare the returns ratio, especially when the details are provided to you. This is a little complicated when it comes to profit after tax or profit before tax. You will have more relation to this when you understand the cost statement, or rather when we prepare more of cost statements, where you'll understand how the earning before interest and tax and earning after interest and tax is supposed to be calculated. So I hope this illustration gave you a clarity on the returns ratio and how they're supposed to be calculated. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.